Well, good day, everyone, and welcome to Truck Stop, Post-Bind Surprise. I think it relates to a change that occurs after a policy is bound. I'm thrilled to be with a great panel today. My name is John Love. I work with Tommy Ruke and a great staff at MCIEF. I would like for Mike, Erin, Brenda, and Drew to introduce themselves, maybe in that order, and tell us a little bit about what's going on in your MCIEF life.
Sure. Yeah. Thank you, John. Glad to be here today. Thanks for having me. So my name is Mike Mitchell. I am with Risk Placement Services. I'm out of Charlotte, North Carolina. My background is I've spent my whole career in transportation insurance, and I've been involved with MCIEF here for, I guess, I'm losing track of the number of years, but I oversee and help out and head out the curriculum committee, where we're looking to build out new ideas on what's trending in the marketplace, what's going on in our industry, and making sure we're keeping abreast of all of that, all of us here at MCIEF.
And you're doing a great job. You're not short on ideas, which is what we're looking for from the curriculum committee. If anybody wants to join Mike on the curriculum committee, just ask, because we'll certainly take you in, won't we, Mike?
Absolutely.
Okay. Erin O'Leary, welcome this morning, Erin.
Thank you, John. I'm Erin O'Leary with Shelley Middlebrooks and O'Leary. We're a wholesale operation in Jacksonville, Florida. I'm on the board of MCIEF and the convention committee. We just opened up registration for our annual conference for MCIEF in Orlando for October 3rd through the 6th. So we hope you will go ahead and start registering for that event. And we look forward to seeing you in October.
Awesome. Thank you for your great work on the convention committee, because our goal is simple, is to make each meeting better than the previous one. We've got about 120 people already registered, 5 people this morning as an example. So should be a smashing success. We'll try not to disappoint, Erin. Next, we have the silver-tongued devil himself. I think we all know who we're talking about. Drew, welcome. Good morning. Tell everybody about yourself.
Certainly, John. Thanks for having us. Appreciate being a part of this esteemed group of colleagues, if you will, the best and the brightest and the who's who. I am Drew Easton. I'm with Amwins Transportation Underwriters. I've got a deep and narrow understanding of this transportation world that we live in. I've had a couple of experiences on the carrier side, but I have found a home on the wholesale side and operating as a program administrator. I've enjoyed a long relationship with Tommy, and I've enjoyed riding shotgun with him on a number of presentations and events such as this. And I would also point out to folks that Tommy is on the radio with great regularity. He is a constant companion on Road Dog Radio. So if you have access to Sirius XM, I would encourage you to jump out there and listen to him. Every month he has a roundtable.
Yeah, you don't have to get Tommy out of bed in the morning and pull him like a lawnmower. He jumps out of bed like a spinning top, and he can certainly outlast me. And it's a gem that we have in Tommy Ruke, without question. And we're all well, I can look at each of you on this screen, including our next panelist, and say we are pickle people, right? Brenda, are you a pickle person?
I am not going to say that. I'm sorry, but yes. Gang, I am Brenda Weiser, and I am the Chief Marketing Officer at Reliance Partners. We are a retail insurance agency that focuses in the transportation and logistics space. I have been in the transportation insurance world for more years than I care to admit, so I will not do so. I am currently the Vice Chair on the Board of Directors for MCIEF. I have been involved with MCIEF since its inception, when Tommy wasn't even sure who would show up that day for the convention that he started. And I'm a huge supporter and looking forward to helping us drive into the future.
Awesome and outstanding. Brenda, we'll never be able to thank you enough for everything that you've done for MCIEF, but just for the record and this broadcast, which is being recorded, we're not planning on letting you, quit anytime soon with regard to your contributions. So stay as enthusiastic as you are right now. To our studio audience, we have sent emails to the MCIEF brethren and asked for questions that might come to our esteemed panel today. I'm happy to say that we have been bombarded with, I think, very important and very non-superficial questions, which we're going to pose and you're going to answer expertly. Also, in our chat window, if you who are on the webinar today have a question, enter it in the chat window. I'll look at it, and if it's not going to be asked, we'll make sure that it gets to the panel. If for some reason after the broadcast a question comes up, seriously, be sure and let us have it, and we'll get an answer to you later today or very soon anyway. On to the show, which we need to get to directly. Change. I guess we're talking about the fact that a risk does not stay the same. Change. I was told a long time ago that everyone, when they write an insurance policy, the last thing they want to do is look at it again after the coverage is bound. Is that realistic, panel?
In our trucking world, I think that's kind of what makes trucking so unique from other insurance coverages in my experience. So in my organization, we write a variety of risks, but the office I work in, we focus on transportation. I think that's a big distinguishing factor between maybe coastal property, where you're not seeing all these endorsements go on. You're not seeing all these changes go on through the policy period. Where trucking, you have drivers coming on and off, you have vehicles getting added, deleted, or commodities being added. Change is the one thing you can know is going to be constant with transportation.
Other comments?
Well, I can say from the retail side, you know, literally the thousands of phone calls we get a day from customers, every time we pick up the phone, it's an opportunity for change. And so you better be prepared, you know, to be able to answer those types of questions, because the market, the trucking market is evolving. What truckers can haul is evolving, and it doesn't wait till the X date to do that. Okay, it happens daily during their policy term. So changes are going to happen.
So what I'm hearing from you two to start with is that we have a big responsibility, irrespective of where our employer is, in dealing with and properly handling change that comes to our attention. How about the change? What is our responsibility absent of hearing from someone? Do we have a responsibility to study our insureds after the coverage is bound?
Oh, we do indeed, John. I think it's underwriting is an ongoing responsibility for all of us involved in the transaction. That's the motor carrier, that's the retail agent, and that's the actual formal underwriter. Those are folks, they all have a vested interest in the protection of that insured and to ensure that the insured is given the opportunity to secure that proper protection. That's not to say they have to have every coverage under the sun, but as long as the exposure is identified and a proper solution is presented, then it's up to those intelligent parties to make that decision on what they want to do. And it's not uncommon that these circumstances that pop up, they're not necessarily a change. They could be an ongoing operation that was simply overlooked. I can't tell you how many times I've had conversations with folks where they said, oh, I didn't think it was that important, or it wasn't related. Go back to Google Maps when that started to get pretty popular. We were using that as an underwriting tool, and we would go in and look at an insured's location, and we happened to find that adjacent to the insured's location was a day camp with a large pond. Well, we dug a little bit further, and it turns out that our named insured owned that day camp with that pond. So through our general liability that was designed specifically for the truckman code, we were directly picking up that exposure for the camp because it was not specifically excluded. So there's some things that are out there that folks just don't recognize as being a true exposure. And part of our job on our side and the retail side is to educate people that don't avoid it, recognize it, and let's find a solution or address it appropriately.
What you're saying, Drew, and I was listening, if you're not curious, is this the wrong industry for you to work in? I mean, you have to.
We don't live in a world of one and done in the insurance world. As Mike mentioned, you just can't write this policy and put it on the shelf. They're dynamic. There's always going to be something going on. Now, it doesn't necessarily require a change to the policy, but it may. And so it's up to all of us to investigate what that exposure or that change may be and again, address it or present the options to the parties involved so they can make that best selection.
Erin, before we started, you were talking about the environment that we're living in currently and how it's fostering change.
Yeah, I'd say with the current economy, people are looking for opportunities to grow, and they might start off doing one operation, and then midterm a new opportunity comes about and it's more revenue for their company, so they'll switch. So we have to re-underwrite, make sure the cargo coverage form's still going to address their needs. We also find change sometimes when it's after a claim. You learn there was an unknown driver or an unreported unit, or you learn a little bit more about that operation that you weren't aware of.
Yeah, we don't like. Wait, I'm sorry.
I was going to say, I actually have an example, Erin. Just recently, the last couple of weeks, we had a situation that kind of did exactly what you explained, where we had a vehicle added to the policy, and it was just given the VIN, year, make, and model, and we put the policy, or put the vehicle on the policy. And when we finally ran the VIN, it turned out this was a dump truck that we were putting on, and we didn't have a dump risk. So, you know, no one was trying to, I think it goes to an omission. I don't think it was an egregious thing. I think it was just, oh, let's add this vehicle to my policy. And all of a sudden we have a different exposure, different type of risk altogether. So to your point, Erin, we are seeing this. Whatever our insureds can do, what's ever going to be an opportunity for them to stay relevant in this economy, they're going to try and do.
Yeah, Mike, to your point, that's not saying the risk is bad. It's just different. And the challenge with that is the current carrier that's on that risk may not have an appetite for that dump truck, or they may, or it may change the pricing. It may improve pricing by placing with another carrier. So, you know, the comment that should be listened to by all the folks out there is this isn't a judgment that's being made. These are just comments to recognize how can we better serve that inline customer, which is that motor carrier.
Exactly. But one of the other things you guys were saying earlier today is one item can lead to a watershed consideration of many others. Let's talk about the 800-pound gorilla and its driver changes, because we're always concerned about who is driving the vehicle that's rolling down the road. And we're not talking so much, Mike, as we did in our last truck stop panel webinar about concealing drivers. Although, Erin, your point of finding out about risk change at the time of loss is the most unfortunate time to learn about an exposure we didn't understand we were covering. But from the standpoint of a driver, let's talk about that. I hire a driver. Maybe they're not up to snuff. How do we handle that?
So I from the retailer's perspective, you know, it kind of starts in our lab. And like we discussed a little bit on our last call, you know, from a retailer's perspective, you want to make sure when you're binding coverage with any market that you're aware of any driver guidelines that that market has. Don't wait post-bind to find out what the driver guidelines are from your market. You will not be happy, and neither will your customers. So, you know, definitely get that information up front and let your customer know. Again, we're not making hiring and firing decisions for that customer. We're making, as Mike likes to say, insurability decisions. And so make sure that you have that information ahead of time. Now, post-bind, what's going to happen? You bet. We're going to get that phone call. Hey, I know everybody has to have 2 years CDL experience, but I have got a guy. He's fantastic. He's got 1.5 years. He was in the military. He drove a vehicle just like the one that I have. You know, I want to get him approved. And again, this is a situation where at this point, we need to go to our underwriter and we need to talk to them about, you know, what kind of experience this driver has and can we make an exception in this case. So maybe from the wholesaler's perspective, maybe you all can share how you feel when you get that call, because we get those calls every single day, multiple times a day.
We do.
So
indeed.
Brenda's going to call one of the three of you. She calls you, Drew. What do you say?
Well, I would say first and foremost, we try to get the driver guidelines that the motor carrier may have. And first and foremost, are they in accordance with their guidelines, not necessarily the insurance carriers? So we're recognizing where that accommodation is being made. If the insured requires that they have drivers with 2 years of experience, they've already made this accommodation, we want to make sure that they've got good information that justifies that accommodation, because we're inheriting that problem, if you will. And then when it comes to us, we're going to want to do the same thing. If this driver, or if we're able to make that accommodation, if we're able to qualify that driver, we want to document the heck out of it so that we recognize that we've made that intelligent decision to accommodate that individual. Now, let's say the driver described by Brenda isn't quite accurate. The driver turns out to be, well, a less than stellar driver when we pull an MVR. Now we have to decide what we're going to do in lockstep with our insurance carrier. This driver does not meet the guidelines. And as Brenda had alluded to Mike's comment about insurability, we now have to decide, are we going to maintain a relationship with this policyholder because they have a driver who is not qualified operating for them? So there could be some responsibilities we have under the terms of the policy to issue notice of cancellation for a change in exposure, increased hazard, a number of different items on there that we don't want to necessarily say, hey, you've got to fire this driver, but we're going to say, you know what, if you have this driver, it doesn't meet the qualities of this insurance company. As we mentioned before, it doesn't mean you're a bad carrier, doesn't mean it's a bad motor carrier at all, just means that this insurance company doesn't like it. So you're putting yourself in jeopardy, and now you're shopping midterm, trying to explain to the marketplace why this driver is so great and why you want them to insure you.
Mike, you've heard what Drew has to say. Expand.
Yeah, you know, I think the insurability is really what it comes down to. It, and Drew hit on it earlier. It's not necessarily a bad thing. It's just trying to figure out what is going to be acceptable or not for our insurance carrier when we get this. We look at it, we say, all right, you know, it also can depend on when we get notification on this about a new driver. If it happens right after the bind, there's some repercussion that could happen if this is completely out of scope. It's something that could, if the carrier says, whoa, this is not what we were expecting, you know, especially if our insured has provided driver hiring standards that said we do not hire drivers with less than 2 years of experience, because all of a sudden that becomes something that could be a bigger issue and a big loss down the road. So it depends. If we get this right out of the gate, it's something that the insurance carrier said, wow, they've completely deviated from what they told us, and it could result in something, you know, a cancellation. They could decide to get off the risk. Hopefully we don't get to that, and hopefully it's something that we can look at and determine it's something more of an exception to the rule, and it truly is something more of a, it's not going to be the norm for their hiring practices. But we, like Brenda said, we get these type of requests every day, it seems like, and it is challenging, and it can depend on the carrier partner as well. And that's something to understand going into it when you're looking at insurance quotes. What is the flexibility of these insurance companies and their underwriting guidelines? Is that something that's going to be important to you? You know, I would expect sometimes with insurance flexibility, sometimes there's a trade-off. It could be more expensive if you're going to a carrier that is willing to have a little more flexibility with it. You might end up paying a little bit more for a driver that has less than the amount of experience that would typically be required. So having those conversations up front and understanding, all right, if we decide to do this midterm, is this going to create a problem or not? So I think Brenda was spot on trying to be upfront, knowing the underwriting guidelines with your client. That's going to avoid any surprises.
Well, you know, I think you all bring up an interesting point. Sorry, John. There's almost a little difference between drivers that get added within 3 days post bind and drivers that get added 6 months down the road. And, you know, for those of us that have been in the transportation world a long time, you know, sometimes there can be some games being played post bind, pre bind, trying to get a quote, trying to get the best quote you can. Maybe this driver we know is, you know, hasn't been the best, so I don't want to show him on the list. I'm not saying me as a retail agent, I'm saying maybe we're not getting full information sometimes from our motor carrier. So there is a difference, and I do think that when we make changes, a lot of changes immediately post bind, I think that is major red flag to our underwriters. Erin, I don't know if you want to expand on that just a little bit, but you know, rather than me coming to you 6 months down the road saying, hey, I really do have an exception, you know, and can we look at that?
Go ahead, Erin.
Yeah, I think as Brenda touched on, drivers and changes in that first 30 days, it can actually impact the driver factor that we've issued the policy at. So you don't want to be binding an account and then come back, a couple of weeks later and ask for more money. If we had known that up front, we would have been able to get the appropriate premium in the beginning, because motor carriers don't like surprises, agents don't like surprises, and the company doesn't like surprises. So the more information we have, a good narrative, that helps. And a lot of times just going back to the retail agent and explaining to them, can you talk to the insured and ask them, do they really want a driver like this on their profile? I mean, this is a person that's going to be operating a piece of equipment that could be valued at $150,000. And if they have 1 year experience, is that who you want to put behind the wheel of your truck? So there's a little bit of education, and a lot of times it's hard to get motor vehicle reports. And we're trying to just tell the insured that that's the driver's resume. They should be providing a motor vehicle report before they're submitting that driver to us, so that we have that information ahead of time. So,
all right, awesome. So as I'm looking at our panel, Erin, Mike, and Drew are all experts who work for firms that might or either probably do work for a firm like Brenda's directly. So my question to the three of you is, do you, or how do you, or is it advisable to relay to the retail agency force what the insurer's appetite is at what point in time? I'm not talking about just drivers, but as we're talking about drivers, I guess the first question is, for the carriers that you represent, do you have a clear understanding yourself of what is an acceptable and what is not an acceptable driver?
Yes, for the most part, we do. Now, the challenge, as you know, John, based on your years of experience, that can be a moving spectrum. It can be, very conservative one day, it can loosen up the next day. We do follow the marketplace as well. When drivers do become more difficult to get, I guarantee you we have a little bit more exception made for those drivers. It also depends on the motor carrier. If the motor carrier is checking all the boxes, there are no other issues with that particular motor carrier, folks may be more accommodating for a one-off driver situation. But I guess if I answer your question directly, or the question being asked directly is, do we communicate with our retailers about all of this stuff? Heck yeah. We want Brenda and her team to be highly knowledgeable about what we expect, what our markets expect, but it is a bit of a moving target. So when there are material changes that come in the appetite from a specific insurer, we're going to have that conversation with them. We want to get ahead of this. We want to recognize not only new business opportunities, but we also want to anticipate what the heck's going to happen on our renewal book of business. Do we have to be thoughtful about that? One thing I don't want Brenda ever to do, I write an account with her, I never want her to market against me. So how do I protect her and protect her interests while she's trying to serve those of the motor carrier, is to communicate the heck out of any of these type of changes as they do come around. Now, we're also living in a world where, candidly, we have a lot of insurance companies that don't have the same level of training that they did when I came up 100 years ago. We've got a bit of a moving target as it relates to drivers, as I just mentioned, or other aspects of underwriting, that there are a lot of red herrings that pop up too. A lot of things that aren't terribly important, but for whatever reason, this underwriter's jumping up and down on this particular point, on this particular account. So we have to be thoughtful too, that I don't want to run to Brenda with everything that's coming out here and act like the sky is falling, because in the grand scheme of things, things are fairly stable. It's just the ends, the really good accounts and the really challenged accounts that tend to fall off, and we have to be thoughtful about that piece. But we do communicate the heck out of what's going on in the marketplace.
Very interested to see what Erin and Mike have to say as competitors of Drew, but compatriots as well.
No, I would agree. And, first and foremost, as a wholesaler, our carriers expect us to have a very thorough understanding of their guidelines. They expect us to protect it. And the more as a wholesaler, those guidelines will allow you to work more efficiently and effectively for those carriers and the retailers as well, knowing where to place these risks, knowing what the appetite is, and avoid any surprises that come down the road. That, this is where it is important for us to communicate these guidelines to people like Brenda and say, all right, look, this is a carrier that has these type of guidelines. So if they add these type of drivers, we're going to run into problems. We're going to see rates go up. And a lot of times that's how carriers share that they don't like those drivers, is the rate on there. they might not outright say no, but the rate is going to make it prohibitively high. So they kind of push it away by their rating itself. So, but it helps everybody in the grand scheme of things. The retailer needs to have a good understanding, and over time you have to keep up with it as well, because like Drew said, things evolve, things change, people's appetites change. Market right now, I think, is probably about as favorable for trying to get exceptions as I've ever seen it. 10, 15 years ago, it's a pretty hard line on 2 years, but factors such as the driver shortage have changed that. It's forced us to be more open to it. And I also think factors that were, when I first started in the industry, the big thing that was going on it wasn't years of experience as much as it was older drivers. Older drivers was a big factor, big concern. So it evolves over time. What might be right now less than 2 years of experience might change, and it might be something, who knows, people that have, green trucks or have certain things on their MVR, but it'll evolve, and you guys just have to stay on top of it.
Green trucks, O'Leary, Shamrock. Okay, what do you have to say?
I'd say we do want to communicate the driver guidelines. I think that's important so that everyone's on the same page, and as new drivers are being presented, the insured and the retail agent aren't going to be surprised on the action that the company is going to take. So.
This discussion is very robust and good. I wanted to ask this question of all of you. It might be too obvious. Does the size of the insured, the number of trucks, the size of the risk impact this discussion about exceptions to driving standards? And give us a couple of real life stories that relate to yes and no, where it's very ironclad. This is the way it's going to be. There are no exceptions. Don't ask. Up to, well, yeah, something like you described earlier, Drew.
Sure. Their size does matter, or it can matter, I should say, John. Specifically, the larger the motor carrier tends to get, they have more resources they can throw at driver development, accountability, perhaps driver training, some of those other things. And if you've got a motor carrier that is doing that, they're really developing or finishing these drivers and holding them accountable, you may find that an insurance provider is more willing to take on that lesser experienced driver because there is built-in accountability with that motor carrier. Similarly, a smaller motor carrier, unfortunately, just may not have those resources. But even if it is a large motor carrier and they do have those structures in place, if they're not performing well, if you're finding driver-related losses, if you're finding all kinds of issues associated with perhaps underperformance of that process of finishing the drivers, they more than likely still will not get that accommodation from a preferred market. But trust me, there are markets out there that'll pretty much write any motor carrier, and as Mike mentioned before, it comes down to price. So it depends on where you're willing to spend those monies. And on the larger motor carriers, they realize that, hey, you know what? We can probably do a twofer. We can get better insurance rates, and we might be able to hold on to drivers a little bit longer if we invest in them. And so there can be a difference between a smaller carrier and a larger carrier, but it comes down to it. Driver quality is driver quality. An inexperienced driver more than likely is going to be a little bit easier to accommodate than a more seasoned driver who has all kinds of nasty experience on there. So that's the balance and the crux that we're running into right now on the underwriting side, is which is more important. And again, I think we're leaning towards that lesser experienced person who's in a updated vehicle with all kinds of bells and whistles versus this old dog driver like myself who you can't break those bad habits.
Interesting point.
I think Drew brings up good points about the resources. I'd also add, coming from the carrier perspective, I would think they're looking at the driver pool and why there is going to be flexibility on a larger account. If you've got if you're, let's say, 10 units and you have one driver with less than 10 years of experience, that means 10% of your driving pool is going to have less than 10 years. But let's say you've got 4 units and you've got one driver with less than 2 years of experience. All of a sudden, that's 25% of the exposure. So there's more exposure for these companies when they have less experienced drivers that are a bigger population of their driver pool. So the larger the risk, it helps kind of spread that out, and it's not as big of an exposure. But the smaller the risk, you have less experienced drivers on the road, is going to be something that might be harder to insure.
Yeah, we
I've written
we
down my,
definitely see that, on the larger accounts. Again, and I'm probably really referencing probably something 25 or 50 plus, where where the insurance carrier isn't coming to us as much about wanting to see a driver every single time. They look at the initial driver pool, they look at the customer's driver guidelines, and determine that those meet the minimum standards that they would want. And, they expect the motor carrier to hold to those standards within reason. And then at renewal, they will check that group again and make sure that the motor carrier is staying within reason. But for the vast majority, most of our motor carriers have to report their drivers to the underwriter. So regardless of whether we think it fits a guideline that either the motor carrier is using or the insurance company has provided, somebody's having to take a look at that driver and make sure that it doesn't change the insurability of the risk. And like we've discussed on here, is that driver going to cost more money, et cetera. But, back to the original question, is bigger, do they get more allowances? Yes, the larger companies definitely do, but they have the backup to, deserve that treatment.
I know the answer varies by insurer, but give us some unit counts where the requirement from an underwriting perspective is to have the insured put in writing and give to you their driver standards in writing.
Well, I'll kind of take that first just for giggles. I actually find it humorous if we have to fill out an insurance company's application that asks, does the customer have written driver standards? Yes, I guarantee you that all of these underwriters on the phone get that application back and it is checked yes every single solitary time. And do you know what those guidelines might be? Probably whatever their last insurance company provided to them if they are a small carrier. And so they're not answering incorrectly, but have they come up with their own internal program? No. I mean, you're typically going to see that on your larger motor carriers. And again, I would be thinking 25, 50 plus units. They are definitely going to have some standardization in, those types of policies. But your smaller carriers, again, are really looking for what is minimum acceptability from the insurance company, and I will amend how I look at my drivers based on their minimum acceptability.
So anybody want to add anything to what Brenda said?
I would just say I'd agree with that range on the units there. That seems in line. And too, I think you've heard it. I've heard it through the years and in the education provided by MCIEF that sometimes you're almost better off not having those driver standards, or if you do have them, you better strictly adhere to them, because that just opens up a whole lot of problems if there's a bad event.
It's, to your point, we could have not a webinar, but we could have a vacation week where we consumed it with this discussion. So yes, you're right. It's kind of the point y'all are making about a lot of these changes. One small change over here impacts many other changes that result from the change request. If it's not just a driver, it could be a commodity, a radius of operation. Give us some thoughts about that, and we'll kind of not forget the driver changes, but move on.
Well, one area, that happens a lot is, a motor carrier will call and say, hey, let's use an example. I'm gonna start hauling, UIIA, so intermodal. So, we don't really, necessarily it's going to be the same vehicle that he has. So, we're thinking from a service perspective, oh, okay, well, this isn't that big of a deal. But then you have to start looking at each policy. You can't just think auto. A lot of times I think, that's the first thing we all jump to is just auto and the auto coverage form. But, you really have to look at the cargo form, your general liability form, how does this new exposure that you're going to take on affect all these forms that you have. You know, case in point, trailer interchange. You know, if you were not hauling UIIA in the past, you may not have ever even heard of trailer interchange and may not have it on your policy at all. And that's something that's going to have to be added. As a retail agent, you've got to figure out, hey, is my market going to add this to the physical damage policy? Are they going to add it to the cargo policy? You know, what's going to be, you know, the best way to go? Plus, it may be that there's an endorsement needed. You know, maybe the UIIA is going to require a trailer interchange limit of, let's say, 75,000. And that particular market that we have it insured with says, look, the max we provide is 50. So now all of a sudden, over this one little item, I may have to move this whole account to make sure that we can take care of all these exposures. But the one thing I want to get across to all our viewers is always think about all of the coverages that you have for this motor carrier when they're making some kind of exposure change.
A word that all of you have used is communication. Isn't that what we're talking about here? I mean, proactive communication with regard to anticipated or desired or even retrospective change is imperative, is it not? Tell us about it.
I think there's a couple things that I've relied on my entire career. Number one is an underwriter, trust but verify, right? We've talked before, is it a commission or is it an omission? You know, is somebody intending to hide something from us, or they just don't recognize what may or may not be important? And the other thing that Brenda just touched on, it's not necessarily the splash, it's the ripples. So you recognize that we have trailer interchange, but it's all these other coverages beyond the auto, I'm sorry, UIA, but it's everything else beyond the auto that candidly can be more problematic. So I think that's where really the whole thing we're talking about here is we're together for one reason, and that's the MCIEF and TRS. And I think aligning yourself with folks that have that knowledge base, that understand how all these coverages or these exposures may interrelate, is going to be key. From the motor carrier wanting to partner with a retail agent who has the TRS designation, or a retailer who wants to show themselves different from the competition by having that TRS designation, this is the real tangible information that they're going to get and understand and be able to apply that daily. So that's really the key here. But again, trust but verify, and it's not the splash, it's the ripples. Those are two things that I think are just so important as an underwriter.
And as you're learning of these exposure changes with your motor carrier, and let's say you get in a situation where you've talked to your underwriter, we can't make it work with the insurance market that we have, and so now we have to move coverage. It is imperative upon all of us out there, both the underwriter and certainly the retail agent, to make sure that the coverage that you're replacing is still giving you what you had before and what you now need. So, sometimes you cut off your nose to spite your face, and, gosh, I may be able to save you money by going here, but guess what? I might have just deleted 3 coverages that you had in a cargo form that, in order to get this other coverage that you did need. So, make sure that, like John said, communication is key, definitely with the motor carrier, definitely with your underwriters, and make sure you have the exposure in hand, understand it, have that natural curiosity to ask questions until you understand it completely, and then relay that story to your underwriter so that you can get the best coverage and the best terms possible for your customer.
It's something. Go ahead, John.
No, you go.
Yeah, so something that comes up that we see sometimes even after a bind or sometimes during the policy period is a move. So let's say it's in Charlotte, you can dip down to South Carolina, it's 5 miles away, and that could change things. If you're with a carrier that hopefully they're filed there in that state, when maybe they are filed there, but to Brenda's point, maybe they don't have a pollution coverage filed in that state, or maybe an additional insured. So you got to make sure you're combing through to make sure all those coverages are going to be that you need for a contract or a shipper. They're going to carry over if you make that move. That's something. And on top of that, there's going to be probably a change in the rate, because they're filed rates for a different state. So when you see those moves, sometimes it's kind of cringeworthy because you're like, all right, you have to kind of undo it all and and look at everything, not necessarily re-underwrite it, but have to re-rate everything. And sometimes I don't know that the insured is expecting that to come back differently. And it could vary wildly, even just by moving 5 miles, it can make a big difference depending on the state you go to.
Absolutely. You told a funny story earlier about radius. And we're going to have one funny story, and then I've got a little bit of a philosophy to wrap up with. Tell us a funny story, Mike, about a radius change or somebody talking about that on a risk. True story, right?
Yeah, true story. So coastal area in the Carolinas, and what it was conveyed to us is they thought the radius was 300 miles. And so we went ahead and rated it 300 miles. We requested the IFTAs prior to binding, and we discovered they're going further out than 300 miles. And I said, well, why did you tell us 300 miles? And the reason or rationale was, well, you can't go that far into the coast. So we just figured you go from the coast over, that would be the radius. So they essentially doubled their radius because they thought they didn't feel like it needed to be, I guess the fact they couldn't go out to the water, it shouldn't be, I guess, held against them.
Seems logical to me. Anybody else? I mean, I'm all for that.
Come on, Brenda, nod your head, Taylor.
Come on, Brenda, you've argued for that. I mean, there should be a lot of rebates going on. Miami, the prices should be cut in half.
Maybe a third, they can't go south, right?
I can see myself with a straight face trying to go to an underwriter with that argument. So.
Well, y'all, by the way, it hurts me, Drew, when you talk about being an old man because you're a child, and all of you are.
That's my behavior.
Yeah, but I will say this: in my career, one of my biggest disappointments in the insurance industry is its poor communications to its customers. Honestly, we tend to blame the trucking industry for a lot of our problems, the insurance industry's problems. But yet we've not done a poor job of accepting the premiums. We've just probably, as an industry, done a poor job of communicating to the trucker. That, if you've walked into truck lines, and you're probably welcome because you're very professional, but you would not want to have them answer the question, the insured, oh, I can't wait to see my insurance folks, because it's not who they're looking forward to seeing the most. You have to be seen because they have to have what it is that you are providing, generically speaking. But from the standpoint of communicating, I've written that down from every single one of you use that term. The more we let a trucker know what to expect from their insurance coverage and company, aren't we in better shape for that? Because yes. Erin, your point about, I'm going to start hauling this commodity. Well, I want to be an intermodal carrier. Well, let's talk about it before you do it. If you just learn about it, if you never say that, and then you're reacting to the endorsement change, which is what we do as an industry, then this can be extremely problematic. I cannot see the downside of clear communication proactively to the customer. What do you think?
So I'll jump in because Drew made a really good comment earlier that sometimes these changes aren't bad. And I think sometimes our truckers can be distrusting of the insurance industry, and they think that everyone's out to get them. And I think if you can build that rapport and trust with that trucker to say, look, it's not always bad. We just need to know this so we can help you out, and we'll get you the right fix, the appropriate resolution, whatever it might be. So building that trust so they will communicate these things, knowing that if I make this modification, it's not going to be a problem. We just need to make sure we're getting them properly rated or covered, really. So it's just building that trust that they're willing to share that information. But Brenda, maybe that's easier said than done. I don't know what your perspective is on it.
Yeah, again, it's really all about the whole process, So again, when it's new business, you're getting to know your customer, and it does take some time to build that rapport, to get that good trust between the two of you. Once you renew those customers and you've had them for a while, they understand that we're here to help them. We're not trying to cost them more money, but as exposures change, it's potential. It could cost more money, could cost less money, but the most important thing is to talk to us about it.
And all four of you are not just friends, but you are insurance experts with the designation transportation risk specialist after your name. If we wanted to name maybe Tommy's biggest accomplishment in the formation of MCIEF, it is to create a designation for true insurance professionals that know what the right things to do are, and that's the way they work. So with that comment, I bid adieu to 4 TRSs who would say, if you were going to do one thing, what would it be? You'd become a
TRS.
TRS.
That's TRS. Thank you all very much for being with us today. Thanks to those who joined, and we'll look forward to seeing snippets of this on our social media for some time to come. Can't thank you enough. Have a great day. Go get them, y'all.
See you in Orlando.
Thanks.